Hey guys, welcome in this new video. I hope that all of you are doing great. So in today's video, we will do something very interesting. We will take a look at gold and the stock market, and we will see what happens to the stock market when gold pushes to a new all-time high and why that is so relevant today. So just before that we get into it, as always guys, please leave a like under the video. It takes, quite a long time for me to record these videos and do the research and structure everything properly. So I just would appreciate the support and make sure as well that you are subscribed to the channel. Alright, so on the left side of the screen, what we can see is the Dow Jones on the monthly chart, and we can go back very, very far in time, all the way to 1915, as you guys can see here. On the right side of the screen, I also have the long-term chart of the price of gold, and we can also go back to 1915. So we have the two long-term chart for the stock market and for gold, which can give us a very good historical perspective. So as you guys know, gold recently made a new all-time high, and that's the reason why I'm recording this video. That's basically what led me to think about that. In 2011, we had an all-time high around 1900, and today in 2020, we just made a new all-time high, a little above than the last one. We are very close to the 2000 level. So we just broke to a new all-time high after a multi-year correction. And so in this video, I want to talk about what this could potentially mean for the stock market and for the economy in general. So in order to know that, what we will have to do is simply go in the past and study the other times that gold broke to a new all-time high and then kept pushing higher for quite some time. So let's do that together. So if we look at the price of gold and we try to see where was really a strong kind of breakout, well, we will see that it was around that time right here. So 1930, 1931, this is where we started to break through on gold and really push to a new level, as you guys can see. So it's a little bit small on the chart. I can zoom in for you guys. So there we go, right? So the price was very stable during the 1920s. Which kind of makes sense because the 1920s are the roaring 20s, we can say. So this is where, in the US you had a lot of prosperity, everything was going well, people were happy and things like that. And then 1929, 1930, and this is where we started to get a big breakout. So if we look at the stock market and see what happened during that period, well, I think it's pretty simple to see, right? We had the biggest market crash ever at the same time, pretty much, that when gold decided to break to new levels. So the stock market dropped massively. We can even calculate it if we want. The drop was about 90%. I don't know if you guys realize that. It was a lot, right? 90% that the stock market lost value. And so this stock market crash began in 1929, but if we look at where we were in 1930, we were still just around these levels there, and this is where gold really started to break out. So this is the first thing that we can notice. So during the 1920s, as I said, everything was going well, so we had a massive up move on the stock market. And then when the crash happened, this is where we kind of, everything kind of switched mentality. So the stock market started to go down and gold started to break higher. So that is the first observation that we can see. So when the stock market is doing very well, gold usually does pretty much nothing. And the reason why is fairly simple. It's because gold is considered as a safe haven. So when things are not going well, when there is a lot of uncertainty in the world and where people, don't trust their currency or they don't trust the economy, they will rush into gold. And the reason why is because gold is the only thing with silver that have proven to keep their value over the very long term, and they always have been used for money. And so that is the reason why they are considered as a safe haven and why we see this kind of move relating to the stock market. So let's go back to the chart of gold and take a look at the next breakout. So after that, after that we got this break here. As you guys can see, gold did pretty much nothing for a very long period of time, and it started to break out around 1968. It did push up a bit, then it came back down, and we really started to see a big acceleration in 1971, 72, 73, etc. right? So around that period in the late 70s is where we started to see the next big breakout on gold. So that's interesting. And now let's go take a look at what happened during that time. And here we have it. Okay, so 1968, where are we? Well, we are around these levels there. And as I said, it started to gain momentum 1971, 1972. We were around these levels there. And after that, so we got this up move on gold. We made another pullback here, as you guys can see, in 1975, and it broke again in 1978. So 1975, we were around here. 1978, we were in this zone right there. So what can we see? Well, we can see that gold had a massive up move. So we went from 36, 35 something to, well, almost $700. So that's a pretty big up move as well, right? About 20 times that gold gained value. And what we can see if we look at the stock market, we did not have such a massive crash just like we had in 1929. But what we can see is that we had a very long period where the stock market basically did absolutely nothing, right? So 1965, 1980, we were still around pretty much the same level. So about 15 years where the stock market did absolutely nothing is where we had a big bull market on gold. So once again, that's very interesting, right? So the stock market was not really good, and even if we look at inflation during that period, we had big inflation, which means that even if the stock market was doing nothing, well, your investment was still going down because there was inflation at that time, and when there is inflation, currency lose value, right? So the money that you had invested in the stock market in that time, not only did it do nothing, right? So it did not, your investment did not go up, but at the same time there was your currency, so the money that you put in this investment, that was losing value. So it was actually not a very good period as well. And this is where gold did perform very nicely. So gold had its breakthrough when the stock market was not in its best shape or form, let's put it that way. So after that, we kept going up until 1980, and we had this long correction, and we eventually came back to break this high of the correction right here around 2007 and 2008, right? So let's go now on the stock market and see what happened in 2007, 2008. Well, pretty simple, right? I think we can clearly see it right here. We had a stock market crash. So 2008, very famous year in the stock market. We had a pretty big down move, as you guys can see. So this down move really started late 2007 and during 2008. And well, what is interesting to see is that exactly at that time is where gold broke to new highs. So gold broke to new highs, and very soon after that, this is where we started to see the big crash. So now that we have taken a look at all of these things, well, the question is, why am I showing you guys this, right? And why it's so relevant? Well, the reason why is fairly simple, I would say. It's because every time in the past that gold has broken to new levels and even kept pushing higher after that is where we had either a market crash or periods during the stock market where it did absolutely nothing. Every single time in the past that gold broke to a new level, this is what happened. And right now, as you guys know, and as I said before, we are at an all-time high on gold. So if we look at the stock market, right, what happened? We had a big market crash in March, pretty much, right? So April, March, which was because of the coronavirus pandemic and the lockdown. And then we had a big recovery, which is mainly because of the Fed, of all the money that they are printing and all the financial assets that they are buying with this money. So if in the past, every time that gold broke to a new level, we had either a big crash or the market did not much for a long period of time, well, the question is, could we repeat this today, right? Could it do the same thing? Could we either get another crash eventually, or could the stock market simply go sideways for a long period of time? I would say that it is a possibility because, as you guys know, the economy today is really not doing well. I talked about that in my last video, but there are a lot of uncertainties in the world, whether it's with coronavirus or the economy, all the damage that the lockdown had on the economy, US China trade war that is still going on, Brexit, US election, all the quantitative easing that is happening, all the currency that is being printed. There are so many uncertainties and so many big topics that will need to be resolved eventually, but right now it's still just going nowhere with this, and so as I said, in those kind of periods, this is where gold really tends to perform the best, and this is where the stock market really doesn't do much. So my point here is that if we study history, if we study how gold behave in relationship to the stock market, well, what we can see is that every time that it breaks a new all-time high, it's usually not a very good sign for the stock market, and it could lead either to a market crash or market stability for a very long period of time. So who knows what could happen with this, right? We could, as I said, get another crash. We could just play around these levels for a long period of time. We could even get what we call a melt up. So what is a melt up? Well, because of all the financial assets that the Fed is buying, and the central banks in general, and all the retail traders and retail investors that are excited and kind of buying into these moves, what could happen is that we might see a very strong push eventually to the stock market, a big acceleration. But then this acceleration, we would consider that as a bubble, and eventually it will burst and it will just come back down. So on and on, all the different scenarios to me makes me think with what we are seeing on gold right now, that we might get a period of high uncertainty and where the stock market does not perform very, very well. I mean, if we already look at the stock market, it has been doing not much since 2018, right? If we if we look at these last couple of years here, it was going up, down, right? So we're kind of already making this period of where the stock market does not perform as well as it was before. So if we look at the crash 2008, then after that we had a very nice and sustained up move, but really since 2018 it has been doing nothing. I don't know if I said 2008 earlier, but since 2018 it hasn't been doing anything. So it could continue like that. As I said, we could get a melt up, we could get another crash. Nobody knows. I don't know neither. I'm not a guru. I don't have a magic trick that tells me what the market could do. But the only thing that I know is that every time that gold broke to a new high in the past, it's not a good sign for medium to long term for the stock market and for the overall economy. That is what I wanted to share with you guys in this video. I hope you learned something new. I hope it kind of opens your eyes maybe to the reality of the situation, because if we look at the market right now, all the excitement, everyone is getting into the market, everyone wants to invest. It's really in those periods where everyone is excited that there is, for me, the greatest amount of risk, where we could get a shift of mindset very quickly. And if everyone starts to change their mindset, well, this is what can lead to bigger and bigger moves on the market. So in this video, I'm not telling you guys to either invest in gold or not invest in the stock market. The only thing I'm telling you guys to do is to be careful, know what you're doing, and do it carefully, right? So I hope you guys enjoyed this video. If you did, as I said, don't hesitate to leave a like under it. And yeah, so on that, take care, trade with care, manage money well, and I will see you in my next video. Bye bye.